Majority of the people think that there is nothing wrong when it comes to copying other people's signals or trades that you can find on some Discord and Telegram groups, but actually it's way more likely that you're gonna lose all of the money or at least some of it doing that than that you're gonna make any significant returns. Hello everyone, my name is Željko and welcome to CryptoGrid. So when we look into the markets, we can see that the volatility is lower than ever and volume is pretty low as well, which is normal for the accumulation phase in which we are currently in. Even in these stagnation markets, people are looking for ways to make profits, and one of the main things for which they opt in is investing in small caps or trading. Both of these have huge misconceptions, like that you don't need a lot of knowledge to be profitable and that you can just check the charts or some data website from time to time and make 2x, 5x or even 10x gains yearly. Unfortunately for those, this is a PvP game where each time that you're making money there is someone on the other side that lost it, and the opposite, so be aware of that. When it comes to investing in small caps, I address things like what to look for in these projects and when you should actually look into them. So looking for some gems might be a solid option, but when we see some signs that the Bitcoin dominance will pull back, when we see some strength of the bulls, and when we are close to the parabolic move up. But when Bitcoin dominance is going higher and higher as it's going currently, markets are highly uncertain. That's a terrible time to go into alts, especially smaller ones. When it comes to trading, many people tried it and they either had a bad risk management in terms of using too large positions of their portfolio, and over the longer time frame their portfolio usually looks like a negative exponential function. So slow and steady decrease at the start, and pretty much the more they are down, they are risking higher the percentage of their portfolio and they are dropping faster. Another thing that I noticed is many of them tend to use high leverage without stop losses, which can easily get you liquidated or lead to a large decrease of a portfolio size. So after they fail trading on their own, they opt either for signal group, some kind of bots or copy trading, instead of educating themselves further and just continued learning and gaining more experience. I read somewhere that on average it takes around 7 years to become profitable, so it's a long and bumpy road. There are many issues with signals, but I'll start with the ones that people don't realize immediately usually. One thing that people don't realize, if you're copying signals from some private group, especially if the group is more popular and more people are copying this person, and if they trade coins with lower liquidity, is that your entry will be worse than theirs, because let's say if I buy some smaller cap coin for a price of $1 per coin, that will push the price, and instead of buying it at $1, you might buy it at $1.01. So your entry is 1% worse than mine in that scenario. By the way, we will always count that we are longing the market to keep the video simple and easily understandable. The same applies to the exits. Let's say if I decide to sell at 1.05, if I'm actually good, most likely my position size will usually be larger than yours due to time spent in the markets and the accumulated returns over time. And also, I will be selling, people might notice the signal before you as well, and that might push the price down to $1.04. So in this case, my profit will be around 5%. And yours will be around 3% when we exclude fees. If you're in a losing trade, let's say I decide to exit at 0.975, if we both have a stop loss, the average sell for both of us might be at 0.97, but if you're manually creating an order, there is a possibility that you sell even lower, so I might sell at 0.97 and you might be selling at 0.96. So I would be at a 3% lose and you would be at a 4% lose at the trade. If you use the same position size in both cases, I would be at 5% gain in the first trade and 3% lose in the second, which is a 2% profit in total. And the person that is copying would be at the 3% gain in the first trade and 4% lose during the second one, which is a 1% lose in total. So what this shows you is that the slight difference in risk-reward ratios per each trade accumulates over time, and it's what differentiates profitable trader from the unprofitable one. Of course, this is just an example, but in real-life situations, you can end up in even more extreme scenarios than this one, which can lead to a much larger losses as well. Another issue with this is if you use the same buy price as the other person, is that when the trades are winning, you might miss the entry because often the price jumped already at the moment when it's posted. But when you are in a losing trade, the price might just push through the entry price up to stop loss or disadvantageous position for you. If someone is posting signals up front, let's say the price of some coin is $1.05 currently, and they set a long position at $1, so they expect a pullback. If you try to front run it and you create a buy order at $1.01 or even $1.00001, so it executes earlier over time and you are getting a worse risk-reward ratio, especially if the strategy of the trader is not to have a high win rate, but to use a high risk-reward ratio. For example, 5-to-1 risk-reward ratio with maybe 25% win rate. In this case, your win rate will remain similar or even the same, but your winning trades will have smaller returns and your losing trades are even at risk of having larger losses, because if you play stop loss just under the group of people, there is a possibility that once that liquidity is taken, that your order executes at much lower value. So you need to be really careful with these things. There is also a psychological aspect to it. Let's say you're on a winning streak, you can assume that this guy is killing it and I should increase my positions and increase the risk as well, which can lead to a huge drawdown on a whole portfolio within just a few trades, and this happens really often with new traders. On the other side, if the trader is losing a few trades in a row, once you start copying them, you will most likely start blaming them, adjusting their strategies instead of taking a full responsibility of your actions. Editing and modifying someone's trades is probably the worst thing that you can do because you don't know the exact thinking process behind it, and it's okay to look into the charts, analyze it, and agree on the trading idea and copy it, or to disagree and not use it. But a partial agreement doesn't exist and will lead to worse results in the majority of the situations. Another thing, if you look at a longer time frame trading, is based on probabilities and good risk management. So there is always a possibility that you copy more losing trades and miss the winning ones, that you miss good entries or good exits, and then you still need to know how to manage the position. Should you still go into the trade even though the price went 3% up, or you should wait for the price to return to entry? Should you exit the trade even though the price decreased, or the price might bounce back and offer another exit at the same price? These are all the things that you need to consider when you're creating a trade. When you're creating your own strategy, the more rules that you can define and the more precise you are, it's better, because it's easier to do some A/B testing and see what performs better, and you can build up your strategy over time. When you're blindly copying someone, you will always lack clarity on some things. One advice I can give you is to not copy anyone and to always have in mind that you're responsible for your own portfolio. And yeah, you might lose all the money, but it's better if you do it, make mistakes and learn and grow from them, than if someone else does it for you. On that way you get nothing but a good life lesson and an empty wallet. So if I'm against copying trades and signals, why do I post them in my Telegram group? The useful thing about signals is that you can analyze what people are doing. Do they trade the breakouts? Are they mean reversion traders? Whether they are doing scalp or swing trades? Do they enter and exit all at once, or they scale in and scale out from positions? You should not copy the exact trades, but if someone is profitable or they excel at the part you are not doing best, just by analyzing others you can improve and reassess your strategy. You can also try new things with some small percentage of your capital, and maybe you will be able to develop something new with better returns than that you have currently, or come up with some things that you haven't even thought about before. I'll be honest, another reason why I'm posting trades is because I realize that the majority of people are leaning towards that and they want everything to be put in front of them. They would rather copy trades and lose the money, escape the responsibility for their own actions and blame others, than actually invest time into learning and improving their own strategy. Also, if you're trying to grow your YouTube as I do and get more traction, it's also something that affects your credibility, and the fastest way to show people that you know what you're talking about is to actually show it. I think that from time to time I make some awesome moves and I am growing my portfolio slowly but consistently. Of course, there is always room to improve things and grow, and I'm working on that as well, but it's beneficial for my channel and my audience to watch me and see how I approach the markets and trading. Still, I advise you not to copy anything that you see on my channel, but analyze it and see if you can implement something from my strategy into yours. Also, when you read Twitter, everyone is super profitable, and as I said, for every dollar made from the one side, there is $1 lost from another. Here, in this way, you have full transparency of what I'm doing, so consider joining the Telegram group where besides these trades, you can see many high quality discussions about different things in crypto space as well. So it's great for learning and coming up with new ideas, but that's it. You shouldn't try to completely copy it, because usually you don't know anything about the risk management of the person on the other side. Do they invest 3% of their whole portfolio per trade? Or their trading portfolio is 10% of their overall portfolio and they invest 0.5% of that, which would be like 0.05% of risk of overall portfolio per trade. So even if you're copying someone, there are some parameters which you won't get from their side, and it will require additional management from your side anyway. So I hope that you like the video. The next one will be on problems with copy trading on different platforms and why you shouldn't use that one as well. Thank you for staying until the end of the video. Stay strong and healthy. Bye.